Good morning, everyone. Welcome to another episode of the MFSA podcast. My name is Hafeez Toofail, and today I am accompanied by my friend, Mr. James Cini, both of us from the Financial Crime Compliance team. You would have heard a lot about money laundering. Money laundering is always on the news. It is also in a lot of movies. We are here today to explore exactly what is money laundering, and along with money laundering, what is the financing of terrorism. So if you are curious about today's subject, please stay with us as we delve more into the subject of money laundering and the financing of terrorism. So, James, please tell us what is money laundering?
Okay, so essentially money laundering is when you have the proceeds of crime, that being money derived from illegal activities, whose origin is obscured through a process, which we will be delving into during this podcast, to make it seem like it is legitimate. So, for example, someone who is a drug dealer, for example, or forms part of an organized crime, corruption, etc., they have a lot of this money, which they want to clean. And once this whole process of money laundering is finished, then the individual carrying out money laundering will have his originally illicit, illegal funds now having the appearance of being legitimate.
So basically, money laundering, if we can understand, would be converting illegal money, ill-gotten money, and making it into clean money.
Yes, have the appearance of being
clean money. We also talk a lot about financing of terrorism and the combating or countering of the financing of terrorism. Can you just explain to us what does it mean?
AML, or anti-money laundering, is often roped in with the term CFT, countering the financing of terrorism. Being AML CFT is the phrase that we hear a lot in terms of the obligations internationally as well. CFT, countering of financing of terrorism, is solely focused on disrupting the flow of funds to terrorists and terrorist organizations.
So if we understand well, the aims of countering of financing of terrorism would mean to block access to these terrorists to financial resources. And if they cannot have access to those financial resources, they would not be in a capacity to carry out terrorist activities.
Exactly.
Moving on, we also talk, as you mentioned earlier, AML CFT. There's a lot of differences and a lot of similarities when we speak of AML, anti-money laundering, and CFT, countering the financing of terrorism. Can you walk us through the differences and the similarities between both concepts?
One clear difference between the two is that of the motive. So what is the objective? Why the individual may be carrying out this activity? Money laundering. If someone is conducting money laundering, what he seeks to do is essentially to obscure the origins of his funds. If these are ill-gotten gains, so money obtained through illegal activities, what he seeks to do is remove this appearance of illegitimacy from them. Whereas with terrorism financing, the sole objective is to pass on the funds to terrorist organizations, sympathizers, etc. Whereas with money laundering, we're usually thinking about there are significant amounts. In terms of terrorism financing, this can be very small amounts. We don't terrorist organizations or even maybe lone sympathizers do not need large sums of money to carry out attacks. So with regards to the magnitude of the transactions, there is also a key difference. Another key difference would be with regards to the money trail. With regards to money laundering, the trail of the money is often quite circular. So it starts off from one individual, and through the process that we will be describing later on, this money gets cleaned and ends up again with the same individual or close associates. However, with regards to terrorism financing, the money trail is more linear. So this will go from one individual to the other individual or organization as the end point of the money transfer.
I think two key takeaways that we can say from the similarities and difference would be number one, to get involved into terrorist financing, we don't need to have large money being involved. And secondly, when speaking of terrorist financing, as compared to money laundering, terrorist financing, as you mentioned, the money trail is more linear. We don't need to do a lot of things to obscure the trail, because then what matters in terrorist financing is mostly on the end goals for the terrorist attacks. I think also for the benefit of our listeners today, it is very important to probe into the different stages of money laundering. When we speak of money laundering, we mostly speak of three different concepts, all of which come up together is well used to do money laundering or to launder ill-gotten money, as we call it. There are three stages involved, namely placement, number one. Number two would be layering, and number three would be integration. When we are speaking of placement, we are talking about placing illegal funds into our financial system, either directly or indirectly. So someone would have some illegal funds that they want to place into the financial system. Maybe you can walk us through a few examples of how placement would happen.
Yes, of course. So, with regards to placement, we have the situation where an individual might have a large sum of illicit money who wants to input this into the financial system. One way of doing this would be by breaking up the sum and depositing it into the bank account. This could be done through several bank accounts with several banks, maybe in several jurisdictions as well, to make the amounts seem less suspicious because they are a fraction of the whole sum. Another way of doing this would be through the opening up of certain businesses, perhaps that they are more cash intensive in nature. And this would also pave the way for abuse with regards to money laundering.
This second example of yours actually brings us to the second concept of money laundering, which is layering. Layering is a process of separating what you call as the illicit money from its sources and creating different layers of transactions. And what would be the end results of it is to confuse any audit or any audit trail that happened with the money. So basically, the purpose is to hide the origins of those illegal gotten money and to separate it from the sources. You mentioned this cash-intensive business earlier. Can you maybe give us an example in this business? How would that work? How would layering work in that cash-intensive business?
Well, one way of doing it is, for example, let's say you have the classic example of a car wash. A car wash is a very high-intensive cash business. What someone could do would be to inflate the earnings of this car wash or whatever business this could be. And this way, you would see the returns of the business being much higher than they actually are. But this real sum would be the combination of both the legitimate gains of the car wash and the gains from the illicit activities unrelated to the car wash, of course.
This example of yours brings us to the third concept of money laundering, which is integration. In this phase that happened after the placement and the layering, the criminals would try to integrate the money back into the economy. Normally, this money would be a mix of either clean money and illicit money, or just illicit monies that have been laundered through different phases of layering. And the end purpose would be to make sure and to make as if the money is clean.
Yes, exactly. With regards to the integration stage, at this point, the money is essentially indistinguishable. The illicit money is indistinguishable from clean money, as it has gone through this whole process. It's important to mention that this these three phases of money laundering are a rather simplistic way of looking at it. Of course, certain techniques go way beyond this. However, this is to give a general idea of how money laundering works.
There is also what we call in Malta as a prevention of money laundering and the funding of terrorism regulation, which is the PMLFTR. This is first the law. The PMLA is the law, and the PMLFTR is the subsidiary legislation. Also, what we have, and that has been issued by the FIAU in Malta, are the implementing procedures that gives more context into the different obligations surrounding AML CFT. The FIAU has issued the implementing procedure, normally called the IPs. We have a part one that captures a lot of requirements and is general on different aspects of business. And also we have a number of IPs part two, which are more specific to different sectors. These AML CFT obligations are applicable to subject persons, as we call them. Can you explain to us what would be subject persons?
So subject persons, as defined by the PMLFTR, are those natural persons, those being human beings, and legal entities, such as companies that offer certain services, that provide certain services. And depending on the service that they offer, they would fall into the category of relevant activity or relevant financial business.
So these natural persons or legal entities can be your bank, can be your insurance company, can be your lawyer, or can be any trustee or corporate service provider.
Yes,
I think what we would want to point out is that these subject persons have a lot of obligations with regard to AML CFT. Why they have the obligation is that they have to be extra cautious in what they do so that they don't facilitate money laundering and financing of terrorism.
Yes, and this would also have knock-on effects on the customer of the subject person. For instance, the increasing obligations on subject persons might lead to higher costs for the subject person in relation to training, the implementation of certain systems, etc. Now, these costs might also be in turn passed on to the customer in the form of fees. So this can be a direct result of these obligations. One other direct result of these obligations could be increased monitoring. So subject persons have certain obligations in relation to transaction monitoring, for example. So when an individual opens an account with a subject person, for example, the subject person is building a profile of the customer based on the expected activity, turnover, and any other information that the subject person will collect on the individual. So if the subject person sees that the transaction is not in line with the customer profile, the subject person might ask for additional documentation with regards to the transfer.
And here we have a lot of examples where clients goes to a subject persons, let's say, for example, a bank, and then the subject person would ask them a lot of information, a lot of documents before this client can be onboarded or be accepted by the bank. One of the things that the bank always asks is about the source of fund, especially when either a huge sum of money is coming into the account as an inward transactions, or on a periodic basis, they do ask about the source of fund or other information. Why do you think collecting the source of fund or the source of wealth, which is quite sensitive for many people, is a must for those subject persons or banks?
Well, the bank, on its part, needs to ascertain that these funds which are being deposited into the accounts are obtained legitimately and not through illicit activities. As part of the transaction monitoring process, this might lead to, as you are saying, delays in certain processes. This might lead to the request for more information. And also, this might ultimately lead to the freezing or closure of a bank account in the case of de-risking, for example, where the bank will think that the risks to maintain the client are outweighing those to keep the client on, essentially.
Subject persons also have the obligation to do customer due diligence. As part of this, when someone, for instance, go to their insurance company, they have to provide updated proof of address. There's also what we hear is that at some point, the company, let's say the insurance company, would call this customer and say, please provide an updated proof of address because the proof of address has been outdated. Why is it so? Why do insurance company or subject persons in general need to refresh the proof of address?
Well, yes, subject persons are required to carry out ongoing monitoring, and this encompasses two main aspects. Firstly, this is in relation to the maintaining of information, documents, and data which are current on the customer. This is what then ties in to the second obligation, which we've already discussed in relation to the ongoing transaction monitoring, transactional activity, depending on the nature of the business.
So what we can understand is that for subject persons, they have the obligation to maintain up-to-date documents on the client.
Yes, and this is why there is this constant emails from subject persons to update certain documents and information.
We have also seen in the past years that subject persons are asking more and more information, are asking more and more documents from clients, and many clients are not happy about it. So why do you think that over the past years, banks have been probing more into the business relationship or more into the activities of the customers?
And this is in line with the AML CFT obligations, which are constantly evolving. So as the obligations upon subject persons constantly evolve, this will necessitate for subject persons policies and procedures to be more robust, and in a certain way, they will be asking for more information in order to meet their obligations. Yes, of course, the bank can ask certain questions in order to establish the nature of the activity that is going to be taking place with regards to the business relationship. Also questions in order to establish the anticipated turnover, how much money is going to be passing through the account. The bank will, again, like we previously mentioned, try to establish this customer profile in order to be able to carry out its transaction monitoring obligations.
Moving on, the MFSA, the Malta Financial Services Authority, as a single regulatory authority here in Malta, have been doing a lot on the AML-CFT front. Can you explain to us a bit what are being done on a daily basis with regard to AML-CFT and compliance to AML-CFT standards?
So the MFSA has a wide remit with regards to its supervisory activities. Particularly us in the Financial Crime Compliance Unit work hand in hand with the FIAU and conduct supervisory inspections on subject persons to make sure that they are fulfilling their requirements with regards to AML-CFT.
Is there anything that is being done by the MFSA to raise public awareness on AML-CFT?
Yes, the MFSA periodically releases guidance documents, both targeted the general public and license holders. We conduct outreach exercises, such as this one, and also engage with both local and international stakeholders on the issues in relation to AML-CFT concerns.
This brings us to the last questions that we have for today, and it is more something on a general note that will help us to conclude today's episode. Why do you think AML-CFT is important?
Well, AML-CFT is important because essentially, if we do nothing, we are telling the criminal to continue doing his illegal activities, to continue engaging in this potentially harmful behavior, and bear the fruits of it. The whole point of AML regulation is to deny the criminal the fruits of his labor. By not taking it seriously, we are essentially allowing him to continue doing this and basically enjoying it. It is our responsibility as members of society to attempt to mitigate this social harm. As the MFSA, it is our responsibility to maintain the integrity of the financial system. So if there is widespread malpractice, this leads to an environment which is not conducive to economic stability. We need to protect the financial system and, of course, do our part in order to comply with international obligations.
Thank you, James, for explaining the concepts of AML CFT on today's podcast and for having also explained the obligations of subject persons. To our viewers, thank you for tuning in today, and we look forward to seeing you in another episode.